Your insurance company just denied your claim. Maybe it was a health claim, surgery, a procedure, a prescription. Maybe it was a homeowner claim after a storm or a disability claim you've been waiting on for months. And that letter came back and said no. Before you panic, before you accept that answer, before you give up entirely, I want you to know something. The law gives you a process to fight back that costs you nothing. The first appeal is free. The external review, the independent third-party review that the insurer no longer controls, is also free. Federal law makes it free. The question is whether anyone told you it existed, and the answer for most people is no. My name is Paul Mercer. I practiced consumer protection law for 30 years. Legal aid, insurance bad faith cases, benefit disputes, always on your side of the table. I am retired. I am not taking clients. I have no angle here. What I'm sharing is general legal information, not legal advice for your specific situation. Laws vary by state, and your plan type matters in ways I'm going to explain carefully. If your situation is complex, consult a licensed attorney in your jurisdiction. That said, the process I'm about to show you applies broadly, and I'll tell you exactly where to check your situation at every step. Let me show you what it actually looks like. Right now, 1 in 5 claims submitted to health insurers on the federal marketplace is being denied. Not 1 in 100, 1 in 5. And across all health insurance markets, the national average sits at roughly 16% of all claims denied. Insurers in this country process more than 5 billion claims a year. About 850 million of them are denied. That is not a rounding error. That is one of the largest transfers of unchallenged financial decisions in the American economy. And here is the number that keeps me up at night. Of every 100 people whose claim is denied, fewer than 1 filed an appeal. Fewer than 1. That's not because the other 99 accepted a fair decision. It's because they didn't know they had a right to push back. The industry knows that number, and it is built into the business model. Now here's the other side of that math. Among the people who appeal, who actually use the process, studies show that between 4 in 10 and 3 in 4 of them win. Not eventually, not after years in court, through the process the law already requires your insurer to give you. At the internal appeal level, roughly a third of ACA marketplace appeals are reversed in the consumer's favor. For Medicare Advantage prior authorization denials, the kind of denials that block care in nursing homes and rehabilitation facilities, the AMA found that more than 83% of appeals were overturned. And when the federal health watchdog looked specifically at skilled nursing facility denials, it found that when people challenged those denials, the insurer reversed the decision 95% of the time. 95%. That is not a close call. That is a pattern. And most of the people on the losing side of that pattern never appealed. There is a law I want to tell you about. It was written in 2010, and it changed what your insurer is legally required to do when it says no to you. Before 2010, your insurer could deny your claim and give you nothing. No written reason, no real appeal path, no independent review. State external appeal laws were a patchwork that often didn't apply to employer plans. There was no federal floor. Congress passed the Affordable Care Act partly to fix that. The appeal rights in that law were a direct response to a documented pattern of insurers denying claims without any meaningful process for the people they denied. And buried in that law, in a provision that almost no one talks about, is a right that the insurer almost certainly didn't tell you about when it mailed you that denial. Let me talk about who these rights apply to. The federal rights I'm going to describe, the right to a written denial reason, an internal appeal, and a free external review, come from 2 federal laws that work together. The first is the Affordable Care Act, specifically Section 2719, codified at 42 U.S.C. Section 300 GG-19. The second is ERISA, the Employee Retirement Income Security Act, which governs most employer-sponsored benefit plans. ERISA's specific claims procedure rules are at 29 CFR Section 2560.503-1, enforced by the Department of Labor. These are not suggestions. They are federal regulations with enforcement mechanisms. For most Americans with non-grandfathered health plans, including marketplace plans, employer-sponsored plans, small and large group plans, the ACA created a federal floor of rights when your claim is denied. If your plan was in place before March 23, 2010, and hasn't changed significantly since then, it may be a grandfathered plan and some of these protections may not fully apply. Your summary plan description will say, check that first. Here's what the law actually says the insurer must do when it denies your claim. 1. They must give you a written reason for the denial, and not a vague one. The denial letter must cite the specific plan provision on which the denial is based, and the specific clinical criteria applied if the denial is for medical necessity. A denial that says, not medically necessary, without telling you which standard they applied, may be procedurally defective. 2. The denial letter must tell you that you have the right to appeal, including your right to an internal appeal and your right to external review. 3. The denial letter must tell you that you are entitled to receive, free of charge, every document the insurer relied on in making that decision. Every internal rule, every guideline, every protocol, every algorithmic criterion they used. You can ask for it, and they must provide it at no cost. 4. For ERISA employer plans, the denial letter must describe your right to bring a civil action in federal court under Section 502A of ERISA after your appeals are exhausted. Pull out your denial letter right now. Is the specific reason for denial cited? Is there a specific plan provision or clinical standard named? Does it tell you about your right to appeal and external review? If any of those elements are missing, the denial may not be legally complete under 29 CFR Section 2560.503-1G1. And here's something most people don't know. If the insurer fails to follow the required claims procedures, if the denial letter is procedurally defective, if they miss deadlines, if they don't provide required documents, your claim may be deemed administratively exhausted. That means you can potentially skip to external review or court without completing the internal appeal. The burden of following procedure is not just on you, it is on them. Now let me tell you about the move you make first, before you write a single word of your appeal. Before you appeal, request your complete claims file. This is a federal right under 29 CFR Section 2560.503-1M8. Write to your insurer and ask for every document, record, and criterion they relied on, every internal rule, every guideline, every protocol. Here is why this matters now more than it did 10 years ago. In October 2024, the United States Senate Permanent Subcommittee on Investigations released a report called Refusal of Recovery. Under subpoena, the subcommittee obtained more than 280,000 pages of internal documents from 3 of the largest Medicare Advantage insurers. What those documents showed, these companies deployed AI tools to systematically increase prior authorization denials for post-acute care between 2019 and 2022. One insurer projected its AI tool would generate over $73 million in savings from increased denials. Not from denying medically unnecessary care, but from algorithmic denial of care that was. Another insurer's AI denial rate for post-acute care went from 10.9% in 2020 to 22.7% in 2022. When those AI-generated denials were appealed, the insurer reversed 95% of them. Under the law, you are entitled to know what your insurer relied on to deny you. If an algorithm was involved, that criterion is a rule or guideline used in making the benefit determination, which means you can ask for it. Put that request in writing, send it certified mail, keep a copy. Now here's what the appeal process actually looks like. There are 2 stages, and the second one is the one the insurer definitely didn't highlight. Stage 1 is the internal appeal. Under the ACA and ERISA, you typically have at least 60 to 180 days from the denial notice to file. For ERISA disability claims, at least 180 days. Read the denial letter. The deadline will be stated there. When you file the internal appeal, here's what the law requires. First, the reviewer cannot be the same person or someone subordinate to the person who made the original denial. That's in the federal regulation at 29 CFR Section 2560.503-1. For disability claims, the plan cannot make compensation decisions based on likelihood of supporting denials. And under 45 CFR Section 147.136, insurers are prohibited from giving financial incentives to claims reviewers that reward denials. The financial incentive to say no is supposed to be removed from the equation. Second, for medical necessity denials, the reviewer on appeal is supposed to be a qualified medical professional, not an algorithm, not an administrative employee. California's SB 1120, effective 2020, goes further, requiring licensed physicians to review prior authorization denials for medical necessity. Check your state. Third, submit everything you have. A letter of medical necessity from your treating physician is one of the most powerful elements of a successful appeal. The AMA consistently reports that physician-supported appeals succeed at dramatically higher rates. Get the letter. Get the supporting clinical records. Get the published clinical guidelines that support your position. Attach a copy of the claims file you requested if there are irregularities in what they relied on. This is where you surface them. In 2024, 36% of ACA marketplace denials were coded as other, a catch-all that gives the insurer maximum flexibility and the consumer minimum information. Under federal law, other is not a sufficient denial reason. The specific plan provision must be cited. Look at your denial letter. If it says other or doesn't name the plan provision or clinical standard, that may actually be the beginning of a strong appeal, not a vague excuse. And here's a right almost nobody knows about. If your claim involves urgent care, delay in the appeal decision could seriously jeopardize your life, your health, or your ability to regain maximum function. You are entitled to a response within 72 hours. The source is 29 CFR Section 2560.503-1F2I and the parallel ACA urgent care rules. If your situation is urgent, write the words urgent care claim at the top of your appeal letter. It invokes a different timeline. Now let me tell you about the move that changes everything. Fewer than 40% of ACA marketplace enrollees even knew this right existed, according to a KFF survey from 2024. After your internal appeal is exhausted, after the insurer reviews it and still says no, you have the right to an external review by an independent review organization. The law for this is PHS Act, Section 2719, 45 CFR, Section 147.136D. For self-insured employer plans under ERISA, the process is administered through the Department of Labor and HHS. The external reviewer is accredited, not employed by your insurer, not under contract incentive from your insurer. Their decision is binding on the insurer, not advisory, not persuasive, binding. If the independent reviewer says the care was medically necessary, the insurer must pay. They cannot override it. The external review isn't asking the insurer to reconsider. It's a legally binding second decision-maker whose final say the statute takes entirely away from the insurer. And the external review is free. Federal law makes it free. 45 CFR Section 147.136, explicitly free to the consumer. But there is a clock running. Under most plans, you typically have 4 months from the date of your final internal appeal denial to request external review. Some plans and states specify different windows. Check your denial letter. If it doesn't state the deadline, contact your plan administrator in writing. Miss this deadline and the external review right may be gone entirely. In 30 years of practice, the cases where people lost the most ground weren't the cases where the insurer was clearly wrong. They were the cases where the consumer waited, assumed the appeal would fail, got the letter, felt defeated, and put it in a drawer. The external review right, free, legally binding, and completely outside the insurer's control, was never used by the overwhelming majority of people who could have invoked it. Now let me talk about a parallel track you should run while you're filing your internal appeal. Every state has a Department of Insurance. In most states, you can file a complaint with the state DOI simultaneously. You don't have to exhaust the internal appeal first. The complaint puts the insurer on notice that a regulatory body is watching. State DOIs have authority to investigate, fine insurers, and in some cases, order corrective action. It costs nothing. It takes 30 minutes. It's an online portal in every state, and it creates a regulatory record that matters if the case escalates later. Now, I want to tell you about the state layer because this is where the picture gets significantly more powerful and significantly more variable. The federal rights I've described are the floor. Above that floor, state law varies significantly. Every insurance policy in America carries a legal obligation the company never shows you in the welcome packet. It's called the implied covenant of good faith and fair dealing. Every state recognizes it, some as common law, some as statutory law. It means the insurer must investigate, must have a real reason, and must act in good faith. In most states, if they don't, the law gives you remedies beyond just getting your claim paid. In California, bad faith is recognized as an independent tort. If your insurer denied you unreasonably, you may be entitled to not just the benefit owed, but economic losses, emotional distress damages, attorney fees, and punitive damages. The California Insurance Code and decades of Supreme Court precedent make this one of the strongest consumer protection frameworks in the country for insurance disputes. In Texas, the Insurance Code, specifically Sections 541 and 542, creates statutory causes of action for unfair claims settlement practices. Knowingly or intentionally wrongful denials can trigger additional damages. Attorney fees are recoverable if you prevail. In Washington state, the Insurance Fair Conduct Act allows consumers to recover treble damages, 3 times the amount owed, plus attorney fees. Washington Administrative Code Section 284-30-330 defines specific insurer conduct as illegal, including refusing to pay without a reasonable investigation and failing to affirm or deny a claim within a reasonable time. Check your state. Your state Department of Insurance can tell you in one call whether your plan is regulated by the state or falls under federal ERISA rules. That one question determines which set of rights applies to you. Now let me tell you when this doesn't work as I've described. The single most important thing to know before you decide how hard to fight is your health insurance self-funded or fully insured. If your insurance comes through a large employer and the plan is self-funded, meaning the employer pays claims directly rather than paying premiums to an insurance company, your state's bad faith law does not apply to you. Federal law under ERISA Section 514 preempts state insurance regulations for self-funded plans. That means the emotional distress damages, punitive damages, and treble damages I described for California, Texas, and Washington, those don't reach your plan. Your remedy for a wrongful denial of a self-funded employer plan is limited to the denied benefit itself, plus attorney fees, under ERISA Section 502A. How do you know if your plan is self-funded? Ask HR. Is our health plan self-insured or fully insured? Or look at your insurance card. If it says Administrative Services Only or ASO, your plan is likely self-funded. This matters enormously for strategy. I've had clients who were furious about a denial, legitimately furious, the denial was wrong, but whose plan was self-funded. State remedies weren't available. We used the internal appeal, the external review, the ERISA court process under Section 502A. Different tools, same outcome in many cases, but you need to know which game you're playing. Here's also when bad faith law doesn't help. An incorrect denial is not automatically bad faith. If the insurer investigated, applied a clinical standard, and made a wrong call, that may be a wrong call, not a bad faith call. Bad faith requires unreasonable conduct, no legitimate basis, misrepresenting the policy, failing to investigate at all. An insurer that followed a flawed algorithm but believed it was applying appropriate criteria is a harder bad faith case than one that never looked at the medical records. An attorney who focuses on insurance disputes can tell you the difference, and that is worth a consultation. If you're in Florida with a homeowner claim denial, the picture is different. Florida's 2023 legislative reforms, Senate Bill 2A, significantly restricted bad faith litigation rights for property and homeowner claims. Washington Post analysis of 2024 Florida insurance data found nearly half of all homeowner damage claims were closed without payment, the highest rate in a decade. Florida's bad faith law for health insurance under Florida Statutes Section 624.155 remains in force. But for property claim denials, the state protections were materially weakened in 2023. A Florida insurance attorney can tell you where you stand. Now let me tell you when to close this video and call an attorney. There are situations where a YouTube video isn't enough, not because the law isn't on your side, but because the administrative record you build during the appeal process determines what a court can consider later, and what you say can affect what happens in litigation. Call an attorney if you have a self-funded ERISA employer plan and the denied benefit involves significant medical costs, disability, or life insurance above $10,000 to $15,000. An attorney who knows ERISA should review your appeal before you file it, because the administrative record at the appeal stage is often all a court will consider. Call an attorney if you've exhausted both internal and external review and the insurer still hasn't paid. At that point, bad faith or ERISA Section 502A litigation is the remaining path. Call an attorney if your claim involves Medicare Advantage denial for post-acute care, skilled nursing, or inpatient rehabilitation. The documented patterns of algorithmic denial and the 95% overturn rate make these cases particularly worth professional review. Many attorneys who handle ERISA and insurance bad faith cases work on contingency, no fee unless they win. The American Bar Association's Find a Lawyer tool and your state bar referral service can connect you with someone who handles this area. Let me also tell you about written demand letters. In most states, before filing a bad faith lawsuit, you must show you attempted to resolve the claim. A certified mail demand letter stating the basis of the claim, requesting payment within a specific time, and advising that bad faith litigation will follow, puts the insurer on formal notice and starts the clock. A consumer can send this without an attorney, though a lawyer should review it first if you're serious about litigation. Most people don't know this step exists between appeal denied and lawsuit filed. In 30 years of practice, I saw one consistent pattern. The people who took the next step, who filed the appeal, who requested the claims file, who invoked external review, almost always ended up somewhere better than where the denial letter left them. Sometimes a full reversal, sometimes partial payment, sometimes the insurer settling a bad faith claim for significantly more than the original benefit. I'm not telling you it always works. I'm telling you it works often enough that not trying is leaving something on the table. The internal appeal, the external review, the state DOI complaint, all free. The written demand letter costs you a stamp and an hour. If the insurer violated state bad faith law on a fully insured plan, attorney's fees may be recoverable, meaning the legal representation costs you nothing out of pocket either. Compare that to accepting the denial. If the claim is for surgery, a course of treatment, or post-acute care, we're talking thousands of dollars, tens of thousands in some cases. The federal watchdog found that when people challenged skilled nursing facility denials, 95% succeeded. 3 hours and a stamp for a claim worth thousands. That math is not complicated. Let me recap. 4 things to walk away with. First, the right to fight back is federal law. For most non-grandfathered health plans, ACA Section 2719 and ERISA's Section 503 and its regulations give you the right to a written reason, a free internal appeal with a different reviewer, and a free external review by an independent organization whose decision is binding on the insurer. These rights exist whether or not the denial letter emphasized them. Second, before you write your appeal, request your complete claims file. Federal law at 29 CFR Section 2560.503-1M8 entitles you to every document, guideline, algorithm, and criterion the insurer used. Send that request in writing, certified mail, today. Third, if internal appeal fails, request external review immediately. Check your denial letter for the deadline, typically 4 months from the final internal denial, though your specific plan may be different. This is the step where the insurer loses the final say. An independent reviewer reads your case. If they say you were right, the insurer must pay. Fourth, find out if your plan is self-funded or fully insured. Ask HR. Look at your insurance card. This one question determines which set of rights applies to you, and it changes the strategy significantly. Tell me in the comments what state you're in and whether you've ever appealed a denied claim. I read every one. If you've been through this process and it worked, share what happened. Those comments will be worth more to some viewers than anything I said here. Everything I described applies whether we're talking about a health claim, a homeowner claim after a storm, a disability claim, or a life insurance denial. The specific statutes vary, but the duty of good faith, the state DOI complaint, and the right to a written reason with a meaningful appeal process run through every insurance line in every state. Next week, I'm going to walk you through the internal appeal letter itself, sentence by sentence. The specific language the regulations require you to invoke. The one phrase most people leave out that tells the insurer you know your federal rights, and exactly how to structure the medical necessity argument so a physician reviewer understands within 60 seconds why the denial should be reversed. That video is on screen right now. The fine print was written to confuse you. Now you can read it. See you next time.